Okay, so this is where we left off, right? We completed our transaction right above, right? We calculated the allowance for doubtful accounts for the 24-hour store, right? They faulted on their payments, and we also calculated our bad debt expense that we are writing off. So once again, bad debt expense for the 907.27. All right, so once again, so now we can go ahead and continue on with our depreciation. So here we are, depreciation number 1, right? We're going to be calculating 1 month worth of depreciation on the truck, okay? Once again, its mileage is 150,000 miles before it needs to be maintenance, no salvage value, and useful life of 7 years. This month we drove a total of 1,950 miles. So once again, from the previous month, right, we've already determined that this is going to be units of production. As you can see, we have our asset cost, we have our salvage value 0, and we have the up to its mileage for 150,000 miles with the service of June 8th. Okay, so once again, we're going to be calculating the month of July. So July, okay, and it says that we drove 1950 miles. So once again, if we remember units of production, it's going to be our asset cost minus our salvage value, which we know to be going to be this amount right here. And we've also solved for our per unit rate to be the depreciation basis divided by the total amount of miles that this car can drive. So once again, giving me 0.2147, okay? Now, the only difference here is that it's going to be based on how many miles we drove this month. So in this case, I'm going to go ahead and perform my equation equal round, because what I'm going to do in order to find my depreciation expense for the month of July is I'm going to take the total number of miles I drove that year or that month, multiply by per unit rate, comma, 2. And that's going to give us a total of $418.72. So once again, we're going to figure out what our accumulated depreciation is, which gives us a total of $676.39. So that's our depreciation for our truck. Okay. So next we have here is going to be calculate 1 month depreciation for both coffee brewers, okay? Once again, the first coffee brewer has a remaining life of 3 years, okay? And this has no salvage value, while the second coffee brewer has a useful life of 5 years, no salvage value. And it says to use straight line. So with that being said, let's take a look at our coffee brewers. So since we have one notion here, we're given that it is going to be calculated based on a straight line. And if we know what straight line does, that means every month it's going to be depreciated for the same exact amount. If you remember our problems that we did for straight line depreciation is that my depreciation basis stays the same. So does my depreciation rate. So therefore, my depreciation expense will also stay the same. Okay, so for my first coffee brewer, right, I just copy the information down to the second line, which is for July. Okay, same thing for my first coffee brewer, right, because I calculated the second one right there. I'm going to go ahead and indicate July, right? It's, once again, my depreciation basis should stay the same, right? It's my asset cost minus my salvage value, which in this case, it's going to be for 1900, right? We're going to take 1 divided by 3, which gives us 1.33333, or 0.33333. And again, if we multiply it and divide it by 12 to give our monthly depreciation, it should be for the $52.78. So once again, because it's straight line, our numbers shouldn't change because it should depreciate the same amount every single month. So in this case, I'm going to take my depreciation for July and I'm going to add this one too. So because there's 2 of them, we have a total of 96 and 20 cents. Okay. So, okay, so let's see what's next. Okay. We also have to calculate our 1 month for depreciation for the coffee grinder. Same thing here, 5 years straight line with no salvage value. So once again, if my coffee brewer was exactly like that, then that means since we're using straight line for the grinder as well, we can automatically assume that for the month of July, once again, the depreciation basis is going to stay the same, the rate's going to stay the same, and my monthly depreciation expense will also stay the same. So here we are once again with the $69.09 for my coffee grinder. Okay. All right. So let's go ahead and see what is next. So here we're going to calculate 1 month depreciation for the computer, printer, and cash register. So once again, it's 5 years useful life, double declining, no residual value. So let's go ahead and go to my depreciation table and go ahead and click on my computer. Okay. So here we know that for a fact that since it's double declining, we know that the depreciation basis will always change every year because it's the formula for your depreciation basis will always be your beginning of the year book value. So in this case, for July, my depreciation basis is going to be whatever my book value that I solved for the previous month because my ending book value is going to be my beginning for the month of July. So here it should be for the 1773.68. And what we're going to do here is we're going to calculate our depreciation basis, our depreciation rate, which we know is going to be 1 over the useful life of 5, multiply that by 2, right, to give us 40%. So now we're going to go ahead and apply our formula, our equal round formula. We're going to multiply my depreciation basis times the rate, comma, divided by 12, because we want a monthly basis, comma, 2, which gives us a total of $59.12, which will solve to be $120.28 for our depreciation, accumulated depreciation. So that's for my computer. Okay. So now we're going to do the same thing to our printer, right? We're going to solve for the July expense for the printer. So once again, if we started in June at $378.87, had a depreciation expense of $12.63. Therefore, I calculated my book value to be at the end of June to be $366.24. So again, that's going to be my new beginning balance or my new beginning of the year book value. So once again, I know it's going to be 1 over the estimated useful life times 2, so 40%. And once again, I'm going to go ahead and type in my formula, equal round, depreciation basis times rate divided by 12, since we want a monthly expense, and we get a total of 2021. Boom. Last but not least, we have the register. So once again, same thing's going to apply here. Okay. We want to solve for our beginning of the year book value, which is the 627.84, right? We know that this is also another 40%. So equal round time basis times rate divided by 12, comma 2. And here we are at $20.93. Okay. So that is our depreciation expense for the month of July. So next piece of information we have is now to calculate 1 month depreciation for our furniture. Again, 7 years straight line and no residual value. So once again, we have a key factor here, straight line. So that means all my furniture, right? They're all going to depreciate for the same amount because that's exactly what straight line does. It depreciates the same for every single month. So I'm going to write in here for the month of July. Once again, my depreciation basis is going to be my asset cost minus my salvage value, which in this case is 660508. Once again, it's going to be 1 over my useful life, which is going to be the 14,285. Okay. And once again, we're going to depreciate it. Okay. Or calculate my depreciation expense as rate times basis divided by 12, comma 2, which again, we already solved from our previous month, right? Because no matter where we are when we're dealing with straight line, it's going to be the same for every single month. So 78.63 for my table is going to be for every single month. So same thing's going to go for our counter. Okay? Right? We know that this is going to stay the same. So that's going to stay the same. We know that this is going to stay the same. And we know this is going to stay the same. So we have another 1421. Okay. Same thing with our desk, right? Because we have another straight line. So July. So the basis will stay the same. The rate will stay the same. And the expense will stay the same. Okay. So we have another $7.84 for our desk. Last but not least, our shelves. Okay. July, we have 57708. We have the 1428, and we have the same $6.87. So once again, this should equal the beginning number. So here we have total of $13.74. Okay. All right, now we're actually getting into the new material. So it says here that we need to calculate 1 month depreciation for our blenders, okay? It has a 5-year life, double declining, and we're going to assume that there is no salvage value. So let's go ahead and find our blenders on the depreciation table. Okay, here we are, blenders, okay? So we know for a fact that it should have 0 salvage value, and we know that it's going to be for 5 years. So double declining, all right? Let's go ahead and put our depreciation method double declining, so DD. Now we need to solve for what my asset cost was and when did I actually place it into service. So, of course, we're going to be able to find that information on our general ledger. If I go to assets and I scroll around to find those blenders, okay, so again, here it is, my blenders. I purchased them on the 1st of July, and I purchased them for a total of $194.83. Okay, so $194.83. Okay, so I'm going to plug that in. 19483. Okay, and we purchased it on July 1st. So therefore, we need to depreciate it for this month. So July, okay, depreciation basis is going to be my asset cost minus my salvage value, which again is 194.83. My rate's going to be 1 divided by useful life times 2 because we're doing double declining, right? We're going to depreciate twice as much. So here, I'm going to go ahead and do my calculations. So 194.83 multiply my rate of 40%, right? I need to divide this by 12 because I need to look for my monthly expense. So in this case, I should get a grand total of $6.49. Okay. There you go. All right. So let's see what happened next. Here we have to calculate 1 month depreciation on the ice maker. It has a 7 years of life, straight line, with no residual value. So let's go ahead and take a look at this. Let's find our ice maker. All right. Here we are, ice maker. Okay, 7 years, no residual value, and we know we're going to calculate using straight line. Okay. So once again, I'm going to go ahead and use my ledger to determine how much my ice maker was. So as you can see, ice maker, right? We purchased it on July 6th. Okay. We have the freight, separate cost of freight right here. And once again, we also paid it on time, so we received a discount. So my total worth of my ice maker is now $1432.41. So now I'm going to plug that number in, $1432.41, for my depreciation expense. Okay, $1432.41, right? And I placed it in service on July 6th. Okay, so once again, we're gonna depreciate for the month of July. Depreciation basis is going to be my asset cost minus my salvage value. Okay, this is going to be 1 over its useful life. Okay, and here I'm going to go ahead and calculate my formula. Equal round, divided by 12 so I can get my monthly payment. And I'm going to, to calculate 1705. Okay, 1705 for my ice maker. Okay. All right. Next we have here is to depreciate 1 month for the refrigerator, okay? It's got a 10-year useful life. We want to do straight line, and it has a salvage value of $150 at the end of its life, okay? So let's go ahead and locate our fridge, okay? We have 10 years useful life to it. We got a salvage value of $150, okay? And we know this is going to be straight line. So once again, let's go ahead and determine what our asset cost is. Okay, so we're going to go ahead and use our, no, wrong one, use our ledger to find our refrigerator. Right, here it is. Once again, we purchased it on the 6th. We got the freight included and we paid on time, so we got a discount for this amount. So my amount is $28.79.18. Okay. So I'm going to go ahead and go here, depreciation table. Once again, $28.79.18. Okay, I'm going to double confirm that. Nope. Okay. $28.79.18. Okay. And we know it's straight line, right? 10 years, no residual value, or no, residual value of $150. Okay. So let's go ahead and compute this. So July, for the month of July, okay? Our depreciation basis is going to be my asset cost minus my salvage value, which in this case is going to give me $27.28.18. Okay? Depreciation rate, once again, is 1 over my useful life of 10 to give me 0.1. And now my formula is going to be depreciation basis times rate divided by 12 to give me my monthly expense. Okay, and I get a total of $22.74. Okay. All right. All right. Now we have last item to depreciate is going to be to calculate 1 month depreciation on the cell phone. It's got 5 years, straight line, useful life of 5 years, straight line, and it has a salvage value of $100 at the end of its 5th year. So let's go ahead and take a look at this. Let's locate our phone. Okay. Here it is, phone. All right. We talked about his 5 years useful life and a salvage value of $100. And now let's determine when we purchased it and how much it cost us. So once again, we're going to go to our ledger. Okay. And we're going to locate our cell phone, which should be considered office equipment. All right, cell phone. We purchased it on the 1st of July for $863.76. So $863.76. $863.76. Okay, let me double confirm that. 863.76. 863.76. Okay, perfect. Okay. Once again, we're doing July, month of July. Okay. We determined that this is straight line once again, SL for straight line. Okay. So once again, the depreciation basis is going to be my asset cost minus my salvage value of 100 to give me a grand total of $763.76. Okay. My depreciation basis is going to be, rate is going to be 1 over 5, the useful life, right? Okay. And then my depreciation expense is going to be depreciation basis times rate divided by 12, right? Comma 2. Typo. Let me erase that. Okay, so equal round. Okay, $12.63 is going to be my depreciation for the month of July. Right? So let's go ahead and journalize this. Okay. Okay. Starting with the first things first is we're going to recognize depreciation expense. Okay. And this account number is going to be account number 66,000. Okay. So once again, that's going to be a sum of all these numbers. So first things first is let's start with our depreciation table and start from the very, very beginning. That way we can collect all of our information all at once, okay? So we started with the truck, right? We started with the truck. Okay, we calculated that one first. Let's locate the truck. Here it is, truck. The depreciation expense for the truck is this $418.72. Right? So I'm actually going to shrink this real quick so we can have multiple windows at one time. Okay. So my journal is I need to do the accumulated depreciation for a total of 676 no 418.72. Okay, and the account number for the truck is going to be 1711. So then the next thing that we did was we did the brewers. Okay, here's my brewers once again. So I'm going to have my accumulated depreciation. Okay, all right, and for this one, we have a total amount of the $96.20, right? We got the coffee brewer number 1 and the coffee brewer number 2. All right, and this account number is going to be brewer. Coffee brewer is going to be 1510. Wait, no, 1511. Right? So here we are, 1511. Okay? Next thing that we calculated was the accumulated depreciation for the grinder. Okay? Grinder, which we solved to be 6909. Okay? So accumulated depreciation for the grinder is 15,021, which we know is to be 6909. Okay. Then let's see what was next. Then we calculated the depreciation for the office equipment. So we did the computer first. Okay. The computer was double declining, so we have 5912 for this one. So accumulated depreciation, depreciation, computer, and that was for $59.12, which in our chart of accounts is going to be accumulated depreciation for the computer is going to be account number 1411. 1411. 1411. Right? Next we have on the list was our printer, right? Our printer we solved for. Printer, right? 1421, which we know to be $12.21. Okay. Next that we have here was our cash register. So once again, the cash register is accumulated depreciation register, okay, which was 14501 or 14051, and this one is for $20.93. Okay. Then we calculated the depreciation for our furniture. So I'm going to locate my tables. Okay. If you guys remember, the tables were the furniture were all straight line. So in this case, I'm just going to go ahead and a cube depreciation for the tables, okay, which is account number accumulated depreciation for the table. So furniture, accumulated depreciation for tables is 1311. Okay. Okay, so 1311. 13011 for the total amount of $78.63. Okay. All right. Then we calculated the counter. Okay. The counter. Which was account number 1321. Okay. So the counter was for $14.21. Okay. Next we have is the desk set. Desk set once again is for a total amount of $7.84. Okay. Last but not least of my furniture, we have shelves. Okay, shelves we calculated, right? A cube depreciation of the shelves, okay, which is account number 13041, which is for the amount of $6.87. Okay. We also then calculated our depreciation for the blenders. So accumulated depreciation for the blenders, okay, which we know that the account number for that is under equipment blenders. It's 1531. Okay, 1531. All right, and let's see what the blender's amount was for. Here we are, blenders. Okay, and the amount of depreciation on the blenders was $6.49. Okay. Then we calculated the accumulated depreciation for the ice maker. Okay, which is account number 15041. Okay, so this one was, okay, so for the ice maker, we calculated it to be $17.05. 17.05. Okay. Then we also calculated the accumulated depreciation for the refrigerator. Okay, which is 15.051. Okay. So the refrigerator, right, we solved it to be $22.74. $22.74. Okay. And then last but not least, we have the cell phone. Okay. All right. A cum depreciation phone. To be a total of $12.73. Okay. Which the account number for this is going to be, phone is going to be the 1461. 1461. Okay, and that's all the depreciations that we calculated. So here I'm going to wrap up my journal saying that this was depreciation for July. Okay. So once again, I'm just going to go ahead and equal sum this because this should equal my depreciation expense. So equal sum. All right. And I'm going to go ahead and click on all these numbers here. And I'm going to equal this to get a grand total of $842.84. Okay. Okay. So now that we properly, fully, fully journalized our depreciation expense, let's go ahead and update our ledger. So starting from depreciation expense, okay, so here we are, depreciation expense. Here we are, so we have that debt expense. Here we go, depreciation expense. So here, 731. It's an adjustment for July. Okay, and here we're going to debit the account for a grand total of $842.83. Okay, so there you go. Boom, my depreciation expense is for $842.83. Okay. Now we have to go through each and every single accumulated depreciation here. So let's go through each asset, right? So here we are. We're going to make our way first to the truck. Here's the truck. Here's the accumulated depreciation. So once again, I'm going to go ahead and put 31st. Again, we already know that it's for the month of July. So we're going to recognize that it is now for the 4/18/72. So that should bring our account balance up to 67639. Okay. Then the next one that we have here is to do the depreciation for the brewer and then the grinder. So we're going to scroll all the way up to the coffee brewers. Okay. I think we're... Okay, here's the brewers. Okay, so once again, 730. Okay, you can write adjustment if you like. But we know that this was straight line, so it's going to be for the 9620, which we're going to add any credits minus any debits to get 192.40. Okay. Then we're going to go down to our grinder. Okay, here we are, accumulated depreciation. You can write adjustment. And we also know that this was also straight line. So therefore, we got to fix this here. It's not a debit, right? It's a credit for 6909. So therefore, there you go. Fix that little mistake there. So here, 6909. Okay, to get a grand total of 138,918. Okay. So let's see what's next. Okay, we got our accumulated depreciation for the computer, printer, and register. So let's scroll up. All right, here we are, the computer. Okay, accumulated depreciation for the computer, 731. Once again, you're going to recognize it's an adjustment, and we're going to recognize that the amount here was for $59.12, which should give us an account balance of $120.28. Okay. Scroll down, we have the accumulated depreciation for the printer, okay, which was a total of $12.21, okay, which then should give you an account balance of $24.84, okay. Then next we have is the register. Here we are, so 731. It's an adjustment, and it's for $20.93, which should bring our account balance to be $42.58. Okay. Next we have is our furniture. So let's go up to our tables. Here we are, accumulated depreciation for our tables. All right, once again, it's another adjustment. And we know for a fact this is straight line, so it's going to reflect the same exact numbers. So therefore, my account should be 157.26. Okay. Then we're going to go to our counter. Once again, we know it's straight line. So therefore, it should be for the 1421, which should give us our account balance of $28.42. All right. Then we have the desk set, right? For the $784. Which should give us I'm going to fix this real quick. Okay, so up 1 plus any credits minus any debits to give us a total of $15.68. All right, here we are for our accumulated depreciation for our shelves, which we know is to be $6.87. So the total accumulated, or the total right now, should be the $13.74. Okay. All right, then now we got to compute the last four, which is going to be our blenders, our ice maker, refrigerator, and cell phone. So let's locate our blenders under equipment. Okay, so here we are, blenders. Okay, so accumulated depreciation for our blender. Okay, so once again, it's an adjustment. And this time, it's a credit for $6.49. Okay. Right. Next, we have our accumulated depreciation for our ice maker, $7.31. Once again, adjustment, and it's going to be for a credit balance of $17.05. Okay. $17.05. Then we have our cumulative depreciation for the fridge. Okay. Here we are, $7.31. Adjustment. Okay, for the total amount of $22.74. And then last but not least, we have the accumulated depreciation for our phone, which should be under office equipment. Okay, here we are, cell phone. Okay, I think I have double names in here. So accumulated depreciation for the phone, which is going to be, okay, so $7.31. We're gonna change, it's not a debit. So here it's a credit for a total of $12.73. Okay, $12.73. So now that we journalized it and we posted to our ledger, let's see what has happened next. Okay, so here we have, okay, calculate 1 month amortization on goodwill, right? And we know for a fact goodwill is going to be a lot like straight lines. So that means if I go to my goodwill, I'm going to recognize it's July, right? That my basis is going to be the same, my rate's going to be the same, and therefore my depreciation will be the same. So it's going to be for the 1167. Okay. So that's exactly what I'm going to journalize here, is that on 731, we got amortization expense, okay? And we're going to accumulate amortization goodwill for the total of $1167. Okay? And I'm going to go ahead and make a little note here that I am going to amortize for July. Okay. So once again, my accumulated amortization account is going to be account number 66500. So 66500, and my accumulated, okay, what's the wrong one? 66500, and my accumulated goodwill should be account number 19101. Okay. 19101. Right? There you go. Right? So let's see what has happened next. Now that we completed all the amortization, all the depreciations, right? We can now successfully close out our depreciation tables because we don't need them anymore. We are done with them. Okay? All right. Cancel. File, save. There you go. Okay. So now the next thing that we have to do is we need to adjust our supplies. Okay, so our office supplies. If we have a total of $125 on hand, that means we must have utilized a lot of office supplies. So here we have perfectly enough room for our last transaction. So I'm going to go ahead and let's go to our general ledger to see how many office supplies we actually have right now to determine how much we used for the month of July. So office supplies is going to be before inventory. So here we are, office supplies. So here okay, we used, okay, so we have a total right now of 26716, right? And our end goal is we need to reach 125. So I got a grand total of use of 142.16. So if I pull this down, right, that should automatically tell me I have 125 left on hand. All right, so once again, I'm going to go ahead and journalize this. So 731. We're going to recognize office supplies expense. And we're going to take it directly out from our office supplies. Okay, which we know this account to be 11,800. Okay. And then I'm going to go ahead and write adjust for July. Okay. And we know now that we used 142.16. So once again, since I've already plugged in my numbers to figure it out, I have my journal all done. So now I'm going to go ahead and locate my office supplies expense. okay, which should be before payroll. Okay, here we are, office supplies expense. Okay, I'm gonna write adjust. Okay, and we're gonna debit 142.16. Okay, 142.16. Okay, and this account number is 6750. All right, there we have it. Now we reach the end of this journal. Okay. So last but not least, let's see what else I have done here. I need to now accrue for Irene's wages, okay? She worked a total of 6 days, but requested a half day off on Monday, okay? So therefore, she worked a total of 44 hours. So let's go ahead and let's find out what her wage rate is. So in this case, I go up to my commissions and I locate that Irene here makes a total of $8.50. Okay? So if so far, as of the 31st, she has accumulated only 44 hours, right? We can say that for the salaries and wages expense, we can accrue that for Irene to be let me see. We're going to take 44 times $8.50 to get a grand total of $3.74. Okay? And of course, because we're just accruing it, right? We're not paying her yet, so therefore we're going to owe her this salaries and wages expense for the $374. Okay. And I'm going to go ahead and write here that this was to accrue Irene's wages. Okay. So if we have this information, let's go ahead and I guess we could post it to the ledger since we know how much it is already. So $374. So here we are at under expenses, right? Payroll expenses. First thing I see here is salaries and wages expense. Okay. I'm going to go ahead and insert Irene here. Irene, right? We got a total of $374. Okay. So therefore, we have the salaries and wages expense for $374 to get a grand total of $3,314. So against this expense account is number 6810. Okay. Now we need to locate the liability because once again, we owe her this money. Okay? We're not paying her yet. We're going to owe her this money. So let's locate our payroll or our salary and wages payable. And here I'm going to go ahead and type in Irene. Okay. And we're going to say that we owe her another $374. Okay. And this account is 2410. All right, so now we have computed Irene's wages. Okay, Now we have to do 2 more. All right, we have to now accrue for Tim's wages. So I've mentioned before in class, right? Tim is someone that we hired in July. He's a bartista, and he's the one we hired him as a salary person. Okay, so if you look at the employees section, right? Since he is salary based, right? He is going to be paid every single paycheck a total of $960 every paycheck. Now, of course, he's going to be working 5 days a week, 12-hour shifts. So therefore, if you think about it, that means he can accrue up to 10 days worth of earnings. And if and of course, it doesn't, the hours that he accumulate doesn't matter. So if he requested off, was sick a day, it doesn't matter. We're still going to pay him a total of $960. So if we take $960, right, and we divide it by the total number of days that he can work, which we know, right, he works 5 days. Okay, so that's usually how a salary does. They usually get weekends off, so at least 2 days. So he can work up to 10 days. Now, if we take the total paycheck of $960, which is every 2 weeks, divided by the number of days that he can work, which is 10, right? That means every day he works, he can earn up to $96. So, with that being said, okay, we can simply calculate how much he earned. In this case, by the end of the month, which is July 31st, he has worked a total of 7 days. So, like I've mentioned before, we can easily recognize that, right? We know for a fact that if we are accruing for his earnings, we are accruing for salaries and wages expense. And once again, we are owing the same exact amount in the payable. Okay, so 731. So once again, this is for Tim. Okay. Okay, and let's take a look. So first thing that we have here is if we know that he's going to be able to collect $96 per day, okay, and it says here that he worked a total of 7 days. So in this case, I can easily calculate 96 times 7, which gives me a total amount of $672 to accrue. All right. So I'm going to go ahead and go to my ledger. Right here, I'm already in my liability. So I'm going to go ahead and say that we now owe Tim, okay, we owe Tim $672, which should bring our total account balance to be $1,046. Okay. We're going to go to our operating expenses. So once again, here is the salaries and wages expense. So again, we're going to accrue Tim's amount, right, for the total of the 672. Okay, which should bring our account balance now to $3,986. Okay, so there we accrue for Tim. Okay. Last but not least, we have to now accrue for Albert's commissions. So let's go ahead and take a look at the subsidiary ledger. Okay, we're going to click on commission. So by the 30th of July, he should have accumulated a total of $166.16. So once again, go to my journal. I'm going to recognize commissions expense, okay, for a total of $166.16, okay? And therefore, we're also going to owe him, right, because he earned the commissions, okay? And we're going to owe him for the $166.16. Okay, for $166.16. Okay, so I'm going to go to my ledger now. Okay, scroll down and commissions expense for Albert, okay, is going to be, right, for Albert is going to be an additional $166.16, which should bring our account balance to $503.55. Okay, and this account number is 6820. Okay. Then we're going to go ahead and find our liabilities because we owe Albert. Okay, here we are. Commissions payable for Albert. That's going to be for $166.16. So therefore, the account balance here is $166.16. And his account number is 2420. Okay. And again, I'm going to make a note here that this is for accruing Albert's commissions. Okay. All right. Last but not least, we have this piece of information that when we actually computed this, right, in the scenario, Bob went into a partnership with another person, okay? They went to agreement and they signed a contract, and now the partners, both partners agreed to reinvest all the profits back into the company, okay? And again, Bob also reinvests his portion of the money. Okay, so when we're going into a partnership, right, the original agreement is you're going to split the profits in half, or for how many partners that you have. So in this case, profits are split 50-50, and the investor and the other partner, right, the general partner, has the executive decision to either invest their half of the money or they can pocket that half of the money. So in this case, this is only pertinent to us when we deal with the equity account. So once again, we will be looking at a partnership equity, okay? So other than that, the last thing we got to do is now create our adjusted trial balance, which once again, we will complete tomorrow. On Wednesday, okay? So with that being said, therefore, I can go ahead and highlight this section here, and I'm going to fill it in, and I'm going to make a note here that this is it. This is the last transaction of my adjustments, and I'm going to be completing the adjusted trial balance. Okay? So from here on out, we're going to continue this on Wednesday, okay, or tomorrow, okay? So other than that, save your work, and all you will be needing to use now is going to be your general journal, your general ledger, and your financial forms, okay? So we're going to be completing the financial forms of the adjusted trial balance, okay? All right. Okay, see you then.